Welcome to the Taxing Subjects Podcast. I'm Ryan Norton, and today we're joined by Drake Education Tax Team Lead, Amanda Watson. Welcome to the show.
Thank you for having me, Ryan. I appreciate your time.
Glad to have you. We have you on here quite a bit, but it's because you are an expert. And because you're an expert and the tax team lead, we're going to have you on to talk about the child tax credit and the other dependent credit.
Okay, well, I'll do my best.
I have no doubt about that. So we'll just go ahead and jump into it. We're going to make this a shorter podcast for our listeners. I know it's tax season. We're in March.
Right.
People are looking at some of their late filers coming in. Not that I would ever do that. Wink. But we'll jump into it, and we'll just start with the basics. So how did the Tax Cuts and Jobs Act change or affect the child tax credit?
Well, Ryan, I think that this is an important thing for everyone to understand. The child tax credit is not a credit that only a small percentage of people get, but a lot of middle income families can take advantage of the child tax credit. And the Tax Cuts and Jobs Act did a couple of really important things to the child tax credit. The first being increasing the maximum credit from $1,000 to $2,000 per eligible child. So that's doubled. That's $1,000. And another important thing that happened under the Tax Cuts and Jobs Act for a lot of folks was the threshold phase out was raised. Prior to the Tax Cuts and Jobs Act, the cap was the $75,000 AGI for single taxpayers and $110,000 AGI for married couples filing jointly. So you can see with the caps at $75,000 and $110,000 that you could probably guess that a lot of our listeners, their clients could be easily phased out. But the thresholds were raised considerably, which makes more people eligible for the credit, which is great news. And the new levels or caps for 2018 include a AGI of $200,000 for single taxpayers and $400,000 AGI for married filing joint taxpayers.
That's pretty significant.
That is a pretty significant jump. So a lot of people who may not have gotten the credit before because of income limits can now get not only the $1,000, but it's been increased to $2,000. So it'll apply to a lot of people filing this time of year, not just the early filers, but even some of the filers that come in late March and early April planning to file their tax returns.
And how much of that is refundable now?
Well, that's a great question. The child tax credit is still refundable up to $1,400. So that has been raised. And that $1,400, from what I understand, is indexed for inflation for future years. So that may increase a little every year for inflation.
That's a substantial benefit.
It is. And it's really important for a lot of people who qualify. $1,400 is a great amount to have refundable.
So now they've increased the threshold. More people can take this credit, although there might be a new limitation on it. What has changed with respect to who can claim it?
Oh, that's a good question, Ryan. In order for a dependent or a qualifying child, I should say, to qualify for the child tax credit, the child must have a Social Security number, and that is a new requirement. So in order for a child to be eligible, they must have a Social Security number, and they must, I think there's a few other requirements, be a U.S. citizen, a U.S. resident, or a U.S. national, and have the Social Security number. So that's an important distinction to understand as we are preparing these 2018 returns.
If I'm a family whose children only have, like, say, an I-10,
right,
is there anything that I can claim if it's not the child tax credit? What can I claim?
That's a great question, Ryan. And it's a question a lot of people have had. Back during the fall and early into January, we were having training classes with our customers regarding the Tax Cuts and Jobs Act, and that was one of their questions. And there is a new credit, which is called the Credit for Other Dependents. And it's really more than a new credit. It's really like an extension of the child tax credit because it still falls under the same umbrella as the child tax credit, but it's a $500 credit for qualifying children who may qualify for the child tax credit, but they don't because of age, or perhaps they don't have a social security number. So if you do have a child with an ITIN, you can get the $500 credit, which is fantastic. Or maybe the child tax credit, which was cut off at age 17, a college student, perhaps. Taxpayers may be eligible for a $500 credit for other dependents for maybe a college student that still qualifies as a dependent.
Is there an age cap on the other dependent credit?
There are some age caps on it, but the child tax credit of being under age 17, that only applies to the child tax credit. And it's really follows a lot along with the EIC age limits for that.
We can move along to another question that I'm sure that our tax professionals may have. Are there any due diligence requirements and penalties that might be associated with either of these credits?
Well, yes, there are due diligence requirements. And a lot of preparers don't really enjoy the due diligence portion. And of course, preparers should exercise due diligence in the return as a whole, but there are certain due diligence requirements that are set forth in the Treasury regulations for both the child tax credit and this new credit for other dependents. Because again, it falls under the child tax credit. If you look at Form 8867, which is the paid preparer's due diligence checklist, the credit for other dependents and the child tax credit and the advanced child tax credit, which is the refundable portion, are all in the same column. The questions are all under the same umbrella. So it has the same exact due diligence requirements as the child tax credit. And what that also means is that it has the same penalty involved for preparers who fail to meet those requirements. And that was $520 for each failure. So it's so important. Yeah. Even though it takes some time, it's really important for preparers to do that due diligence.
And what was that form again, just in case somebody didn't hear it the first time?
It's Form 8867. And another change that's not really on the topic of child tax credit for Form 8867 is the addition of head of household. Just as a side note there, the head of household filing status was also added to Form 8867 for due diligence.
Oh, that's definitely important.
Yes, yeah. It is. And I think that, a few years ago when they added the child tax credit to the Form 8867 and imposed those Treasury regulated due diligence requirements, that a lot of preparers who may not have been practicing due diligence requirements on Form 8867 had to kind of learn and work up some systems to make that work. So it shouldn't be too hard of a transition if they've been filing returns for taxpayers with child tax credit.
And does the Drake education team offer any classes that might say cover due diligence in case you're worried about not establishing a good system within your practice, and you might want someone to help you out with that?
That's a good question. And it is important to, one of the requirements of due diligence is to know the law. So taking a good class is important. And on our tax training website, drakecpe.com, we do have some due diligence courses. And all of our classes at Drake CPE are strictly tax. They don't relate to Drake tax software training specifically. But we do have a myriad of training modules and different ways to have training on the Drake system and Drake data entry, including due diligence and live format webinars. So there's definitely help. And even in the program, there's videos that they can click on that will walk preparers step by step what needs to be completed for due diligence for child tax credit.
That's great. So the Drake ETC site basically can help you learn due diligence and other tax law related items at your own pace and the way that best suits you.
Absolutely, Ryan. And I can't recommend enough those little videos too, because if you're stuck, you're on a screen and you're like, it's March. I'm not going to take a class. Click on that video. And usually they're 3 minutes or less, usually less. And we can walk you through, okay, step 1, do this. Step 2. And it can save you a call to us. It can save you wondering what to do. And day or night, that video is available for our preparers.
That's all I have as far as questions go.
Okay.
Is there anything else you might want to talk about with respect to the child tax credit or the other dependent credit?
Well, there's one other thing I want to point out. In Drake, if you've entered your dependents on the dependent screen and you've answered the due diligence questions, Drake will automatically calculate the child tax credit if we determine that a child is eligible. The same thing for the $500 credit for other dependents. The program is just going to calculate it, so you don't have to worry about checking a box to have it calculate or wondering which is better. We're gonna calculate that and optimize that for the best credit, because of course the 2,000 is better than the 500, and you can't take both for one child. So as long as the due diligence is in place, it's all automatic. It's really a no-brainer.
That's great.
Right.
Well, Amanda, thank you again for being here. I appreciate
Ryan,
it.
it's always a pleasure.
I'm sure we'll have you on again soon. So
Okay.
It's great to see you again.
Thank you.
That's it for today. We'll see you all on the next Taxing Subjects podcast.